You've been taught entry techniques that promise to take you to profitability. You've been given countless indicators and chart patterns. You've learned strategy after strategy, but none of these things will help you become a consistently profitable trader if you don't know the single biggest secret to profitable trading. In fact, you'll likely continue to struggle until you start doing this one thing correctly. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, a proprietary trading firm located in New York City. Founded in 2005, S&B Capital trades stocks and options and futures and crypto, both as discretionary and automated traders. In this video, Lance Breitstein, the #1 trader at a Tier 1 prop firm in back-to-back years, will reveal the trading secret that is the true huge edge that elite traders use to crush it in the markets. Unfortunately, it's what the vast majority of retail traders are never taught. And in this video, we're going to reveal exactly what it is and how you should apply it for maximum benefit.
In this video, I'm going to be presenting exponential bet sizing. I'm Lance Breitstein, and you can follow me on Twitter at @TheOneLanceB. So what separates the elite trader from a novice, intermediate, or anywhere in between? What I've noticed is it's a confluence of traits, but if any of them stands out to me, the most important thing is betting big when the situation calls for it. The best traders that I know all have hugely skewed asymmetric bets, and when that trade shows up, they knock it out of the park. And in doing so, they make up for all the errors in between and just wipe the competition away. Stan Druckenmiller, one of the most famous investors of all time, puts it nicely. If you look at all the great investors, and they're as different as Warren Buffett, Carl Icahn, and Ken Langone, they tend to make very, very concentrated bets. They see something, they bet it, and they bet the ranch. The mistake 98% of money managers and individuals make is they feel like they've got to be playing in a bunch of stuff. If you really see it, put all your eggs in one basket and watch that basket very carefully. And look, I'm not saying you quite want to listen to Stan there by putting all your eggs in one basket as a trader, but I think the sentiment is absolutely correct. Whether it's investor, day trader, swing trader, when the standout odds get absolutely incredible, the absolute best traders are betting huge and making that trade count and maximizing the opportunity. When I first started, my trainer made many mistakes and he had many weaknesses, but he was exceptional at one skill in particular, and that was bet sizing. And what bet sizing did for his trading was incredible. It allowed so much skew, so even if he overtraded, or even if he made some mistakes, or even if he made missed opportunities elsewhere, everything was made up for and then some, all in one trade, and it was amazing to watch. And what that did is it allowed him just a massive, massive cushion. And so often, it might be the same layup trade you're making and the same executions, and so while other traders might just make an average trade, I can make my month in that. And so, especially in the layups, people would be having a solid trade or a decent trade, but if it was really, really good and really, really liquid, I wanted to maximize that and go huge. So what I want to do is walk you through what I like to call a little MatheMagic. And the reason for this is many people can't intuitively grasp just how important this is. The mathematics are kind of wonky when you don't have it right in front of you, and a lot of traders don't realize what's going on behind the scene. And all human minds are particularly bad at exponential changes. We can't comprehend just how quickly things can go totally lollapalooza. So we're going to take a couple simple case studies. We're going to look through what happens mathematically on equally sized bets, what happens mathematically on linearly sized bets, and then we're going to finally take exponentially sized bets, where a lot of the magic happens. So here are the parameters. We're going to have our A trades, which are our absolute best ones. We're going to have our B trades, C trades, and D trades. And what I did is I just made up these stats. There's nothing special about them, but I roughly approximated what some of these good trades will look like. So an A trade obviously has a large expected value of about 350, B trade 110, C trade 10 cents, and D trade losing 20 cents. So what a lot of people miss out on, and I think is one of the most important things to recognize, is that the A trades by their nature tend to be very, very rare. Yet D trades are everywhere. On each day, there's so many tickers moving around and there's so many trades you can make, but the reality is that edge only occurs in a very small subset of places. So if you're gonna just be trading tons and tons of setups, even a professional trader is washing out in the majority of them. Most trades are C or D trades, where in the aggregate, you tend to break even on those. If you were to look at the days, weeks, or months and years of a trader's performance, I would guess that probably 90% of their trades do actually wash out, and it's the major outliers that make the bulk of their day. So using these stats, we're now going to look at 100 sample trades.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So what we find is that by the nature of D trades being so much more common, if we bet equally and we're taking all these trades, you're going to end up with a negative expected value and a negative P&L of 1060. Now for the linearly sized bets, what we were going to do is bet 1 on the D trades, $2 on the C, 3 on the Bs, and 4 in the A trades. So that's just a basic linear pattern, improving slowly over time. And so this actually makes a massive difference in itself, because now what happens is in our A trade, it's enough to make up for all the rest. And so that results in us having a net P&L of $7.10. So that alone took us from being a negative expected value trader, and now we're positive. And I can't stress enough how big a loan that is, right? These traders are taking all the same trades. These traders are trading them in the exact same manner, but one trader won't have a career in 2 years and the other is gonna find some success. Now what happens if we bet an exponential amount? So an exponent function, if we were to take a D trade, that would just be 1, C trade would be $2, B trade would be 4, and A trade would be $8. And now this has an incredible effect, because that A trade, which has such a better expected value, we're putting so much more money on. So when you multiply that 8 by the 350, you make a whopping $28 in that trade alone. That $28 made more than makes up for all the D trades and gives you a hefty cushion on top. So now you end up as a really strong trader with a net P&L of $24.40. But I want to take this one step further. What if we work on that and skew our betting even more? Or as I like to call, exponential betting gone wild. So on the D trade, we're still going to bet our $1, but then on the C trade, we're going to bet 3, and then on the B, 9, and the A, 27. So also an exponential function, but just a little bit more juiced. And what you can see is when we're betting so big on that A trade, which is 27x the amount of our D trades, we make a whopping $94.50 expected value P&L on that trade. And that might seem crazy, but the big elite traders that I know, that's not uncommon at all. It's totally normal for an elite trader to bet 20x, 50x, sometimes even 100x on their really choice A or A plus setups compared to the mediocre washout ones. And what happens now is you have a net P&L of $108. So again, I can't stress enough. These are all the same trades. It's all the same thing. All we're changing is how we're betting across the quality of trade. And the difference is just unbelievable. And so what are the implications of this? There's a couple. First of all, you might be an unprofitable trader that's struggling, but you might be making the right trades in the aggregate. The only difference is you aren't betting properly. Imagine being a poker player and betting the same on every single hand. You would never stand a chance. Why is that? Because in poker, most of the hands you get are not going to win you the hand, right? It's the same as trading. If you were to play every single one and bet $1 every single hand, you're going to be out of chips in no time. The other thing to keep in mind is adding size made up for a lot of mistakes, right? We heavily weighted the number of mediocre D trades to be 96 out of the 100. And yes, that's kind of an exaggeration there maybe versus reality. A lot of people might not make those. But the point is that when you start to skew the really high expected value trades, you can make up for all the paper cuts you take. Especially in a slower market, what we find is that a lot of traders will still take paper cuts, but when the home run comes, they bet on it and make it happen. So then finally, exponential sizing is what can really take you from good to great and then to elite. Everybody I know that has broken into the realms of being an 8-figure trader, they don't do that through hitting singles every day. Singles in day trading world can only get you so far due to liquidity and number of ops. In order to really hit the big leagues, you need to make those big bets count. The bigger traders have worked up from linear betting to then exponential, then it greatly exponential indeed. And to be clear, we're not necessarily taking a super scientific approach to this and calculating the right dollar amount for every single trade. This is just for example's sake and the type of curve and bet sizing curve I want you guys to be thinking about and emulating over time. So now the practical advice on how you can implement this into your own trading. So first you want to add skew gradually and prudently. You don't need to go nuts all at once. Like I said, if you're someone that's betting equally, first try betting linearly. Increase your bet as the opportunities get better and better. If you're someone that already does vary their bet size, see if you can make it more skewed. Perhaps you can bet less on the D trades and the C trades, and perhaps you can push some of those A trades more. But the key is to be mindful of too much size skewing the EV of the trade. Some trades just don't have the liquidity, and if you do this too irresponsibly, it might skew how you trade the trade itself. What I would also recommend is focus first on sizing up the easy, high probability layups. You want to be very careful of sizing up on the high variance home runs. Until you kind of have the cushion and the experience to weather through some of that, really focus on those layups because those are going to be what gives you the confidence and cushion to keep on pushing. One thing also to add is if you're a beginner trader, this might not be the topic for you right now. A lot of beginner traders need to solely focus on getting reps and building their system first. You want to do so safely while losing the minimum amount of money possible. But once you know that you're executing properly and that your system has edge, then it might be time to slowly add skew to your trading. And the extreme levels of skew I used in some of those examples, those really are for the elite level traders. They're okay with the variance. They're okay if a big trade goes wrong because they've been in holes before. They know what drawdowns are like, and they have the psychology and the mindset to get through those things. And overall, what I would say is this also isn't for everyone. Bet sizing still needs to align with your personality and your risk tolerance. Some people are okay with the home runs. Some people have life situations or personality situations where it's going to be more just hitting the singles. So one thing I do want to address is this. Many people would argue that it's fine and normal to bet equally on each trade. In fact, a lot of people have been taught that you should be betting equally on each trade. But I can't stress this enough. It is dead wrong. Whoever is teaching you that is wrong. Objectively and mathematically wrong. Yes, I understand why it might be more comfortable to bet the same amount, but imagine if people did that in poker. Poker is a much clearer analogy where there's a finite set of outcomes and you can calculate the odds. If somebody ever bet equally on their poker hands, they would never, ever make it anywhere. All because, again, most trades and most hands don't have edge. And when you do have significant edge, you need to skew it to make up for that. And I would argue that if you're betting equal amounts, it means one of two things. You either aren't taking the time to study and differentiate between your different hands, and you can't properly identify which one of your trades have skewed edge versus others, or it means you're choosing to make mathematically suboptimal bets. Again, there's nothing necessarily wrong with that. People's personalities are different. There are many people that due to their home life or their income or whatever else, they can't afford or don't wish to be volatile in their trading. It's totally fine, but you need to acknowledge and accept that you're limiting your returns and also not doing the suboptimal betting. There is no way anyone will ever do as well betting equally or even linearly versus the person that is betting exponentially as their hands get better. One other thing to touch on is I know what my pocket pairs look like, and that has afforded me the ability to bet huge on them. And that's given me a career that's far surpassed many others around me. But I would even push as far as saying that it's your job and your responsibility to bet big. Even Bella would say it. When things are in your favor, it's your job to bet big. In fact, we would even argue that it's too risky not to go big. You can't afford to not go big on your best hands. Why? Because that means otherwise you're allocating more risk elsewhere in subpar hands. It is your job to do this to yourself if you're trying to become the best trader you can be. Coming soon, I also want to present to you the sizing note card. This will be a practical video tip for how you can add size to your trading. Until then, feel free to reach out with any questions. As I always say, right after we get through the questions, then let's get the F to work. Thank you all for listening.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.